Stare at this turbine long enough and you'll realize it shouldn't be here. It is fully operational and humming away. But if you look at the company's official fixed asset register, this machine doesn't exist. It is a zombie asset. The standard textbook response is simple: identify the omission and write the assets back into the ledger immediately. But in a live corporate environment, that textbook solution often fails. It ignores the friction of internal politics and the immediate pushback you'll face from management the moment you try to change their books. Your primary obstacle is the head of finance. They are incentivized to protect the current balance sheet, which means they often act as a gatekeeper, blocking any finding that might complicate the financial reporting process. Mention adding that turbine to the register, and they'll counter with technical excuses. They'll claim the gear is immaterial scrap, or that it fails the accounting definition of an asset because it supposedly provides no future economic benefit. Rookie auditors often fall into the trap of arguing against these points. They get stuck in a subjective debate over accounting definitions, a fight where management holds all the home field advantage. To reveal the actual financial risk, you have to stop the technical debate. You need a way to bypass the gatekeeper and secure the data without ever triggering their accounting defenses. To prove a material misstatement, you need a single piece of evidence: a highly detailed, itemized list of every piece of ghost machinery on that factory floor. But as a chartered accountant, you likely lack the mechanical background to accurately identify a high-pressure compressor versus a turbine. The only people who can build a reliable catalog of this hardware are the plant engineers who maintain it every day. However, if management believes the engineers are being pulled away for an accounting project, the request for their time will be denied almost instantly. Leading with your true objective gives the business a reason to block the flow of information before the audit even gets started. To get the data you need, you have to pitch an initiative that sounds like an operational win for the business. You suggest to management that the company needs to create a physical asset tracker to better manage its off-book equipment. You frame this entirely as a security measure, a necessary step to protect company property from theft or pilferage. You also highlight that tracking these machines ensures the engineering team can perform mandatory safety maintenance. This creates a situation where management cannot say no. Rejecting a proposal centered on physical safety and theft prevention would be a clear failure of their own oversight. As a result, they'll likely authorize the plant engineers to spend weeks building the exact itemized list you actually need. By focusing on operational risks that management already cares about, you've effectively turned the business into your own data collection team. Once that engineering list is in your hands, the direction of the audit shifts back into your control. Now you can begin the valuation. You start by pulling the specific identification codes for each of those unrecorded zombie assets. You cross-reference those codes against identical, brand-new counterparts that are already recorded in the official fixed asset register. Once you have the value of the new counterpart, you apply a depreciation adjustment based on the age of the zombie asset to determine its current worth. This correlation gives you a hard data valuation that is very difficult for the finance team to argue against. Now you evaluate the impact. If the total value of these assets is low, you can choose to walk away and focus on more significant risks. But if the engineering data reveals millions in unrecorded value, you issue a high-risk observation. Backed by their own engineers' data, the finance head has no room left to hide. Effective auditing requires you to understand the mechanics of the business as well as the mechanics of the ledger. When you master both, you stop debating and start uncovering the truth.